UniCredit's Kornelius Purps joins us now. Thank you very much for joining us today. If I may ask you about the issues in Italy that are surrounding the coalition government, they're not really about the budget or the economy, so is it going to affect the cost of borrowing long term?
Well, hello. Definitely political uncertainty is always not wanted by investors, and therefore the dispute which is currently being carried out will also have a moderate impact on the auctions of government securities these days. But we do not expect a tremendous impact from the dispute. As you stated and as we have just heard, the issue is not about economic or fiscal issues, it's about other areas, and therefore I think investors should be relatively sanguine about the prospects for Italian's budget.
So how do you see this bond sale going in terms of yields?
Well, I'm not able to put exact numbers here. We have seen some spread widening on Italian bonds versus German bonds in recent days. So in the 10-year area, we are at about 170 basis points above German bonds. This is relatively wide for Italian standards, but we do not expect much more widening, even at today's auction from here. With the confidence vote out of the way, probably as early as tomorrow, we see even the potential for a spread widening on Italian bonds. Or spread tightening, certainly.
One other thing that Berlusconi has done at the moment, they set up a ministry for economic development in Italy, but it doesn't actually have a head at the moment, and that's something that Berlusconi's holding up. So is there really an impact on the future of the economy because of this tussle in the coalition?
Well, it's politics, and I think it's quite obvious that the Italian government has to deal with a slow growth rate, with a high debt level, and here certainly a panel needs to be established, wanted to be established. Here it's still not quite clear who is going to head this panel. But I think investors will be relatively sanguine also about this, because fundamentally Italy is running a good budget, particularly compared to the other periphery countries, and therefore spread widening was muted in the market, and we expect this to remain the case going forward.
No, you mentioned the other countries there. We're looking at a probable downgrade for Spain. Has that already been priced in, a Moody's downgrade, and what impact would it have?
Well, I would say that a one-notch downgrade is priced into the Spanish government bond market. Now, Moody's still holds a AAA for Spain, which is probably urgently needs to be revised. And in the market, there's talk that as early as tomorrow, Moody's will announce a downgrade. For investors, it will be critical whether it will be a one-step downgrade. This would be priced in my view, as I stated. But it could also be a two-notch downgrade. And then there's always the outlook the rating agencies gives, and a negative outlook on the two-notch downgrade. This will definitely have a negative impact on the Spanish bond market and probably on the European government bond market universe as a whole.
Okay, Mr. Purps, thank you very much for that.